Functions. Introduction and Objectives. This study session on introduction and objectives of functions is aimed at exposing students to an in-depth understanding of the concept of function as it applies to business management. At the end of this topic, students are expected to know the basic concept in mathematical functions, be accustomed with the equation of a straight line, solve real-life business problems with the aid of mathematical functions. Main content. Introduction to functions. A relationship which assigns to each value of one variable, example x, a corresponding value for another variable, example y, is called a function. Function relationships are usually expressed either as equations or sometimes in a visual form, example graphically. Some functional relationships may have more than one variable decoding the value for the resultant variable. The variable or variables for which the value is available is called the dependent variable because its value depends on the value of the independent variable or variables. The types of functions to consider here are 1. Linear functions, 2. Quadratic functions, 3. Exponential and logarithmic functions. Linear functions. The equation of a straight line. Consider the point P with coordinates x1, y1, and the point Q with coordinates x2, y2 in the diagram shown below. The straight line passing through these 2 points has an equation given by y minus y1 over x minus x1 equals y2 minus y1 over x2 minus x1. This equation is given in a point-slope form. In the slope-intercept form, the equation of the straight line PQ is given by y equals mx plus c, where m equals y2 minus y1 over x2 minus x1, where m equals slope or gradient of the straight line and c equals intercept on the y-axis. Examples of business problems with linear functions. Question. The marketing manager of a company over a period of time has studied the relationship between the cost price and the selling price. An item for 2 naira is sold for 3 naira, and another item costing 5 naira is sold for 7 naira. The marketing manager is convinced that these 2 examples provided him with a general method for determining the selling price of every item in his store. Find the function which determines the selling price of an item. Also determine the selling price of an item costing 8 naira. Solution. Let us present the selling price per unit by naira y and the cost of an item by naira x, when x equals 2, y equals 3, and when x equals 5, y equals 7. This means that the coordinates of the 2 points given are 2, 3, and 5, 7. Substituting these into the equation, y minus y1 equals y2 minus y1, x minus x1, x2 minus x1. We have y minus 3 over x minus 2 equals 7 minus 3 over 5 minus 2. Y minus 3 over x minus 2 equals 4 over 3. 3 multiplied by y minus 2 equals 4 multiplied by x minus 2. 3y minus 9 equals 4x minus 8. 3y equals 4x minus 8 plus 9. 3y equals 4x plus 1. Y equals 4x plus 1 divided by 3, or y equals 1 over 3 multiplied by 4x plus 1. The functional relationship y equals 4x plus 1 over 3, or 1 over 3 multiplied by 4x plus 1. When the cost x equals 3 naira, the selling price y is y equals 4 multiplied by 8 plus 1 over 3, or y equals 1 over 3 multiplied by 4 multiplied by 8 plus 1. Y equals 32 plus 1 over 3, or y equals 1 over 3 multiplied by 32 plus 1. Y equals 33 over 3, or y equals 1 over 3 multiplied by 33 equals 33 divided by 3. y equals 11 naira. Question 2. The management of a manufacturing company intends to purchase a machine which costs 10,000 naira initially. The cost accountant has estimated the rate of depreciation for that machine to be 1,000 naira per year. Determine the function which gives the depreciated value of the machine at the end of any given year. How many years will it take to depreciate the machine fully? Solution. Let T denote the number of years and Y the depreciated value of the machine. In this problem, we apply the formula Y equals MT plus C. At the end of any given year, T equals 0. The value is 10,000 naira. Y equals MT plus C. 10,000 equals M multiplied by 0 plus C. 10,000 equals C. Depreciation 1,000 naira per year, and so M equals 1,000, Y equals 1,000 T plus 10,000. That is, the function that gives the depreciated value of the machine at the end of any given year, T, is Y equals 1,000 T plus 10,000. Machine is fully depreciated when Y equals 0. Y equals 1,000 T plus 10,000. 0 equals 1,000 T plus 10,000. 0 plus 1,000 T equals 10,000. 1,000 T equals 10,000. T equals 10,000 divided by 1,000. T equals 10. The machine will be fully depreciated at the end of 10 years. Question 3. In a certain economy, when income evaluates for consumption rose from 400 million naira to 1,000 million naira, consumption expenditure also rose from 366 million naira to 900 million naira. Determine the functional relationship between disposable income and consumption expenditure. What will be the consumption expenditure if disposable income increases to 1,200 million naira? What is the marginal propensity to consume? Solution. Let disposable income be represented by Naira X. Let consumption expenditure be represented by Naira Y. When X1 equals 400, Y1 equals 366, and X2 equals 1000, Y2 equals 900. Substituting these coordinates, X1, Y1, X2, Y2 equals 400, 366, 1000, 900. Going by the formula, y minus y1 over x minus x1 equals y2 minus y1 over x2 minus x1, y minus 366 over x minus 400 equals 900 minus 366 over 1000 minus 400. Y minus 366 over x minus 400 equals 534 over 600. Y equals 366 over x minus 400 equals 0.89 over 1. Cross multiply. Y minus 366 equals 0.89 multiplied by x minus 400. Y minus 366 equals 0.89x minus 356. Y equals 0.89x minus 356 plus 366. Y equals 0.89x plus 10. The relationship between disposable income and consumption expenditure is y equals 0.89x plus 10. Now when x equals 1,200, y equals 0.89x plus 10. Substitute y equals 0.89 multiplied by 1,200 plus 10. Y equals 1,068 plus 10. Y equals 1,078 naira. When disposable income increases from 1,200 million naira, consumption expenditure also increases to 1,078 million naira. By definition, marginal propensity to consume, MPC, equals change in consumption expenditure divided by change in disposable income. Using the figure given in the question, MPC equals 900 minus 366 over 1000 minus 400 equals 504 divided by 600. 504 over 600 equals 0.89. Therefore, for every 1 naira rise in disposable income, consumption expenditure also increases by 0.89 naira. Note, income not used for consumption is either saved or invested. We see then that 0.11 naira, that is 1 minus 0.89 of the extra 1 naira of disposable income, is saved or invested. Therefore, we refer to the 0.11 as the marginal propensity to save, MPS. MPC plus MPS equals 1. MPS equals 1 minus MPC. Self-assessment exercise. 1. In the regime of former President late Musa Yar'Adua, the demand and supply functions of petroleum product (PMS) in Nigeria are given as P plus Q minus 10 equals 0 and P to the power of 2 minus 8Q minus 16 equals 0 respectively. 1. Find the equilibrium price and quantity for the product. 2. On January 1, 2012, former President Goodluck Jonathan removed subsidy, that is, imposed tax of 10% on PMS. What will be the new equilibrium price and quantity? 3. Nigeria Labour Congress (NLC) protested, and instead of the imposition of tax, a subsidy of 20% per unit of commodity was granted. What will be the new equilibrium price and quantity? 2. The management of a manufacturing company intends to purchase a machine which costs 30,000 naira initially. The cost accountant has estimated the rate of depreciation for that machine to be 3,000 naira per year. Determine the function which gives the depreciated value of the machine at the end of any given year. How many years will it take to depreciate the machine fully? 3. In a certain economy, when income available for consumption, i.e., disposable income, rose from 40 million naira to 100 million naira, consumption expenditure also rose from 30 million naira to 80 million naira. A. Determine the functional relationship between disposable income and consumption expenditure. B. What will be the consumption expenditure if disposable income increases to 120 million naira? C. What is the marginal propensity to consume, MPC? D. What is the marginal propensity to save, MPS?